Greetings, attendees to this CAFE webinar with Leslie Martin. My name is Keith Martin, and we're going to start the webinar in just a minute or two. Thank you. Hello, everyone, and thank you for joining this CAFE webinar. We're just waiting for a few more participants, and we'll start the webinar in a minute or two. Thank you. Well, good afternoon and welcome to this CAFE webinar with Polaris Strategic Insights Senior Vice President, Leslie Martin. My name is Keith Martin, and I am the Co-Executive Director of the Canadian Association of Financial Institutions in Insurance, or CAFI. On behalf of myself and my Co-Executive Director colleague, Brendan Wicks, and the CAFI Board of Directors, thank you for joining our webinar today. CAFI is a not-for-profit association dedicated to the development of an open and flexible insurance marketplace. Our 15 members include the insurance arms of Canada's major banks and credit unions, along with their insurer business partners, which underwrite credit protection insurance and travel insurance. Now, this is the first of 3 fall 2022 webinars, which we will be offering with key opinion leaders, regulators, and policymakers in the insurance space. Today, we're delighted to have as our guest presenter, Leslie Martin, who is a Senior Vice President at Polaris Strategic Insights, a 20-year consumer and B2B research veteran. Leslie leads Polaris Consumer Insights and Financial Services divisions, as well as its health affairs and reputation specialty practices. With a client portfolio that encompasses every sector, she specializes in discovering the belief and motivational systems at the root of each relevant audience and illuminating the message themes that will provoke and inspire those audiences as target markets, influencers, and stakeholders. Prior to joining Polaris Strategic Insights, Leslie was a senior researcher and account lead at Leger and at Comscore. And she also led research departments at Sears, Cosset, and Great Gulf Homes. She has authorized research-based articles in peer-reviewed medical journals such as Healthcare Quarterly, and her research has appeared in many Canadian newspapers, as well as Marketing Magazine. Leslie holds a BA in Business Communication from Brock University. Now, today's topic that we will be discussing with Leslie is consumer preferences and product development insights emerging from recent research in financial services and relevant comparator industries. I want to mention that today's webinar will be recorded and posted on our CAFE website in the near future. And if you have any questions that you would like to pose to our presenter during the Q&A session, which we have allotted 20 minutes for during the concluding section of today's webinar, please send them to me as the host using the Q&A function of Zoom, and I will pose them on your behalf. Unless you specifically request in your question to be identified as its source, I will pose all questions to our panel or to our guest on an anonymous basis. And now, just before we get the webinar underway, I want to extend a special welcome to a number of VIP guest attendees. In addition to many representatives from our 15-member CAFI companies, we have also attendees today from allied industry associations, such as the Canadian Life and Health Insurance Association, and from insurance and financial services regulators and policymakers from across Canada, including the Financial and Consumer Services Commission of New Brunswick, or FCNB, the Nova Scotia Department of Finance, Quebec's Autorité des Marchés Financiers, or the AMF, bienvenue, the Financial Services Regulatory Authority of Ontario, or FSRA, the Ontario Ministry of Finance, the Government of Alberta, and the British Columbia Financial Services Authority, or BCFSA. Welcome to you all. Well, before we begin, Leslie has prepared a high-level presentation for us that will speak to some of the themes that we want to discuss today. And I'll jump in with some questions, and then after that presentation, I do have some additional questions to ask Leslie. And of course, if anybody in the audience at any time has a question, as I mentioned, send them to me through the Q&A function of Zoom, and I'll be happy to pose them on your behalf to Leslie. Leslie, over to you.
Great, thanks very much, Keith. Let me just share my screen and we will get going. Okay, so what I've done today is I put together a brief presentation talking about what consumers in the post-pandemic world, focusing not only on what they want, but who they are and what they're going through. And I think this is very important to understand what they're going through, what's going on in their minds, to understand exactly what they want. So I'm looking at it through both lenses. Some of this is I'm sharing research projects we've done for a number of different clients, and actually in a number of different industries as well, because I do think they're relevant. In other cases, it's more just my experience, which I will speak to. So as I said, looking at where we were and where we are. Definitely don't want to belabor this point about what the pandemic gave us, because we all know what it gave us, right? We've all lived it, but we can't forget it because it really has changed who we are. So what did it give us? It gave us mental health issues. It gave us health concerns. It gave us economic worries, which are continuing to this day. And we learned how to do things differently. So just looking at some health concerns, we've been doing tracking studies for Mental Health Research Canada. And I don't have the dates on the slide, sorry about that. But what we found is we had a lot of issues. So before the pandemic, anxiety and depression, 5%, 4% of Canadians said they had high anxiety and depression. Since the pandemic, and it really peaked back in February of last year, we had 28% of people saying they had high anxiety and 17% saying high depression. So that really is saying something. Like this was actually a real problem that people were having. What was it that was causing it? Well, there was concerns for themselves and their family, particularly sort of in the summer of last year. There's also economic downturn that was causing stress. And we saw that sort of, it got better in the fall. It's going back up again, as we'll talk about later. And there was a lot of that fear of losing their job, about losing their pay. How are they going to take care of themselves? How are they going to take care of their loved ones? So that really impacted the way we think. It also changed how we do things. And we've seen this in a lot. I've seen it in so much research that people are really changing how they do things. They had to during the pandemic. They weren't going out as much. They weren't shopping in stores. They were thinking about new ways to do things. And I just pulled out some stats here that really speak to that. So in 2020, 82% of Canadians had shopped online. And they spent a total of $84.4 billion. And that's up from 74% spending a total of $57.4 billion in 2018. So that was a real big jump in that e-commerce. And at a time when retail sales were falling in February to May of 2020, retail sales were down 17.9%. E-commerce sales had almost doubled. So really, we were thinking about new ways to do that shopping. And we'll talk a little bit about Amazon later in the presentation, but that was really a big change that we had there. There was also the grocery shopping online. 19% had engaged in online grocery shopping pre-pandemic. That jumped to 30% in the first month of the pandemic and 49% after a year. So again, we saw a huge change there.
Leslie, just on that last statistic, do you have any sense of whether that will be ongoing? Or do you think that as the lockdowns have stopped, people will start returning to in-person?
And what I think we're going to find, and you're sort of, it's spoiler alert on this one, but what people want now is a choice. So is this going to decrease? Yes, like grocery shopping, online grocery shopping is not going to be as high as it was in the midst of the pandemic, but I don't think it's going to go back to that sort of that 19%, that very few people that it's not used. There are people who are going to continue doing this. And this is what I'm seeing in a lot of things, that people just want that choice. Some people are going to want to go back to the old way. Some people are going to want the new way, but it's never going to be all or nothing. So where we are now, our mental health issues are getting better, but we have other concerns: high inflation, high interest rates, instability here and abroad. And so this is actually showing, this research was conducted in July of 2020 and from Mental Health Research Canada again, and it's looking at where our levels of anxiety and depression are now. High anxiety is at 11%, high depression at 9%. So when you think back to that sort of that 28% and 17%, it's much better. However, it's not back to the 5% and 4% before the pandemic. This I just thought was interesting to throw in there, because it's always interesting to see what's going on differently across the country. Ontario and Alberta, across the board, have always had a bit higher anxiety and depression. Mental health issues were higher in those two provinces. Quebec, always lower. Every single poll, Quebec has had the lowest levels of anxiety and depression. So I thought that was an interesting find.
Leslie, do you have any speculation as to why that is?
Honestly, not really. That is one thing that has surprised us as we were doing this research, and what it is in Quebec. But they're not feeling, and even when Quebec had a lot of cases and a lot of issues with the pandemic, it's still, they had lower anxiety and depression. So I don't know what the Quebecers are doing right, but they are doing it right, because they're feeling not too bad about the whole situation. So that's great. Looking at inflation, just again, quickly as well, what's going on. 67% of Canadians expect inflation to increase over the next few months, and they expect it to last for about a year. So this is now what the worry is. It's interesting, you know, we sort of thought at the end of the pandemic there was going to be this rainbow light at the end of the tunnel, but this light is now being dimmed for other reasons.
Leslie, just on that statistic, it's interesting in economics that if people think inflation will go up, it's a self-fulfilling prophecy.
Yes, it is. Yeah. And I'm getting into that too as well, about what people are doing with that. So we asked what people think the blame on inflation is, and it's a lot of things. The impact of COVID, the government, breakdown supply chains is big. The war in Ukraine, Bank of Canada. People are not thinking there's one culprit for it, but many. And how people are feeling about themselves in this world of inflation. Only 16% of employed Canadians say their wages are keeping up with inflation. So that is going to affect how they spend and what they're doing, because only the vast majority of people who are employed in Canada feel that they are losing ground with this, because their wage is not keeping up with the inflation. So I just wanted to put in there as well, Polara is doing a rage index, and our rage from July is boiling, but not hot, but not boiling is what we're saying. So 49% of people are feeling some kind of annoyed or angry about some topics that are going on in Canada. And the topics that we looked at were, the big things that are coming out, the latest stories in the news, that is really getting to people. The types of changes happening in Canada, that's getting to people. the economy that's getting to people, the government, and even when you look at your own personal financial situation, it's only 32% are feeling angry or annoyed, but still it's 1/3 of Canadians are having issues with their own financial situation. And where does this lead us? We have 1/4 of the Canadians are feeling burnt out, exhausted and burnt out, and but 63% are still hopeful for the future. So that was just giving us a little bit about where we are, because again, I think we need to continue thinking about that when we look at where we're going and the changing behaviors. So again, looking at how people are spending their money. And this is something I think is interesting because it's, again, that sort of that light at the end of the tunnel. And I've done research earlier in the pandemic that found that there were quite a big chunk of Canadians who were saving more during the pandemic. And I think we can all relate to that. You know, we weren't traveling, we weren't going to concerts or going out for dinners or doing that type of thing. We were saving money on, commuting and going to the office. We were all staying at home. We weren't doing anything. So we had this pot of money. And I know there's been a lot of people talking about that through the pandemic, was what was going to happen with that money when the pandemic was over, when people could start to spend. But here we are, hopefully coming out of the pandemic, and what we're finding is people are still cutting back because of inflation. So we have 73% of people are buying cheaper brands of groceries or less expensive food. 72% are still eating out less. 68% spending less on vacations, and 67% delaying major purchases. This is being seen across the country. It's pretty similar. There's not a big change. And it's also identical in urban and rural Canada, which is an interesting finding as well. And we also look at it by income. And so sure, not surprisingly, people who have a lower income are making more of the cutbacks, but even those who have a higher than average income of over $100,000 a year are still, the majority are making those cutbacks. So it really is happening that that money that we all thought was going to be out there and being spent as we're coming out of the pandemic, it's not. It's also affecting investing. We have 36% of people who are thinking about investing less money or cashing out their investments because of inflation. And I've done other studies with investors as well who are saying the same thing. You know, these investors, they're saving less than they were last year. They're worried about what's going to happen. They're currently investing less, and they think moving forward into the next year, that's going to continue. So we're looking at financial services. So what does all this mean? And I know this was sort of a big lead up to what you really came to see, but what does all this mean for the financial service sector and what people want? Because really, this is really leading to what people want. So before the pandemic, and first of all, I'm talking about financial services. By that, I don't mean the daily banking transactions, you know, deposits, transfers, paying bills. That was done online before the pandemic, and it's still being done online now. That hasn't seen a big change because it was already remote before. So what I'm talking about now is the bigger things, the arranging for loans, arranging for mortgages, getting insurance. So I'm actually pulling some CAFE research that I've done here about how credit protection insurance in this situation was purchased in 2018. It was through face-to-face. People wanted to see that face-to-face. So we're talking pre-pandemic. Travel insurance, that had more of an immediacy, which we've seen, like it's not as big of a purchase. So it was kind of split between in-person, online, or over the phone. What was important to people was the ability to talk to someone to get their questions answered, more so than the ability to do it online. So again, pre-pandemic, that's what we saw. During the pandemic, things did change. Okay, actually, I will go forward. It didn't change for everyone. I actually did focus groups during the pandemic, and I talked to people in the territories, in some of the smaller places, smaller towns. Some people still were just going to the bank to do these things. We're wanting to talk to people in the bank, and they weren't letting the pandemic stop them. So I do want to preface this saying that yes, there was some changes, but it wasn't to everybody. But since the pandemic, the majority of people felt more comfortable conducting financial transactions online. They preferred the convenience of conducting transactions online. They thought they might change how they're doing it in the future, but if you look down at the bottom, 60% still said I look forward to going back to the branch and seeing people in person. So this is what I was saying earlier to Keith. It's not an all or nothing. And I don't think we're ever going to see an all or nothing that, oh, okay, we moved online during the pandemic, we can still be online. And that's not the case. Again, the people are more likely to consider doing processes online than they were like during the pandemic. Less people were likely to do it in person at a branch, of course, because of the pandemic. But again, it's not an all or nothing here. People are comfortable, and this is again with the credit protection insurance work that I did for CAFI back in 2021. People were more comfortable with doing things virtually, talking to a representative over the phone or using different emails or different website functions. So now we're getting to once the pandemic is over. This is a different, again, I'm taking a different look at what's happening now, but I think this is this really encapsulates what I'm saying about choice. So I did work for the Prosperity Project, which is research being conducted about how women are working and how women succeed in the workforce. So this is very focused, but I'll get to my point. Women working from home during the pandemic would like to continue doing so at least part of the time. So 42% said they wanted to continue working remotely all the time, 31% a hybrid model. So this is what women want, but this is the one that really encapsulates it. With 45% of women say they're likely to quit their job if they don't get what they want in terms of working remotely or working on a hybrid. If they were asked to return to the office full time, 45% of women say, no, I'm going to quit my job. And we looked into this a great deal because this is one of the findings of research I've done recently that I found really surprising. Because I thought that people would be more like, okay, it's going to happen. We got to accept it. It's going back to the office. It's the way it is, but it's not. 45% of women are saying no. And part of the reason for this is they have options. Because there are a lot of companies and there are a lot of offices that are offering that hybrid or the remote work. So if they're working for a company that says, no, you need to come into the office full time, they're like saying, no, I don't. And if you don't like it, I'm going to go somewhere else. And this is what's going to be translated into other parts of the world as well.
Leslie, are you getting a sense from managers as to whether they're understanding this and are beginning to respond by offering some options that maybe, in theory they prefer not to, but they feel they have to because of the way the workforce is responding?
Definitely. I am seeing that from managers. A lot of people are re-looking at what working means and what they can do to make sure and they have to, honestly, they have to, because the people who are stuck in their roles are going to be left behind. And this is not only for managers, which we're seeing here, and a lot of managers are, it's also it's going to be for retailers, it's going to be for financial services. You need to be able to offer options to people because they're not willing to accept just anything. They're not willing to accept it anymore.
A related question, Leslie. I think one of the arguments that workers have made and employees have made is that they felt as productive working from home as if they were in the office. Do you have any empirical evidence around that supports that hypothesis?
Yes, we've done some work, and I will say, with the work that I predominantly do is opinion research. So this part of it's hard to say, right? You can ask somebody, are they productive at home? And whether they say yes or no, most people are saying yes. But also it goes beyond that, because you can look at how companies have functioned, because there's a lot of companies that for at least a period, maybe perhaps not now, but a period over the last 2.5 years where their workforce, almost all of it was from home. And how many of these companies, sort of went out of business or were not as productive? A lot were just as productive, if not more productive. And that's where you see the evidence. And that's where the managers are starting to step up, or the business leaders are starting to step up and say, okay, what can we offer? Because it's not hurting us to have people work from home. Okay, and then we asked about, okay, so after COVID, how are you going to want to do your financial transactions? And again, I'm talking about the bigger ones. In person at a branch is on top at 47%. Now that is down 10% from before COVID. So there is that shift, but it's still 47% who want to go into a branch. And the reasons why, they prefer dealing with people in person. They want to speak to a knowledgeable representative, right? And this is very important as well. And I've been doing a lot of work with financial advisors, and what people want by that, from that whole being able to speak face to face. And for some people, it will be phone, video, or email, right? Like, especially when you look at the video, that's something that's changed. Before in February 2020, I could count the number of Zoom meetings I'd been on one hand. I can't do that now. So we're all more comfortable with that, but we can't forget that relationship. We just can't. And when I looked at financial advisors and what people want from that and how people feel about their financial advisors, it's interesting that, sure, how do you say things are going well with your financial advisor? You're making money. 100%. But what comes a close second is the relationship. I have a trusted relationship. I feel supported. I feel like I'm okay because of this relationship. And that's a relationship that a lot of people can't get by just using those online tools. And again, this was looking at obtaining credit protection insurance after the pandemic, and most people wanted to do it through contact. And that's just what I was saying. They need that contact, about having that face-to-face, having that being able to talk to somebody. It's not the same. However, you have the 26% who want to do it self-serve. They don't want to talk to somebody. They just want to fill out some forms online. And as we go back to that 45% who are going to quit their job, if those 26% are not getting that ability, they're going to go to someone that does, because people are really focused on what is going to meet their needs. And I feel like at the beginning, I just have a couple more slides, but I feel at the beginning, I talked about mental health and what people were feeling and the stress that they were under. And then I moved to financial services. And I'm wondering, do you understand why this matters? Like, mental health, how you do your financial services, do the two meet? 52% of people in Canada feel stress when interacting with financial service sectors. 52% are feeling at least often or sometimes feel stress about dealing with that. So it does matter. What are they feeling stressed about? Applying for a mortgage. 49% of consumers are stressed out about that. Applying for a loan to finance a large purchase, 47%. But even other things, making an international payment from shopping online, 30%, opening a bank account in a country other than Canada, 29%. So there are other things. Changing banks or financial institutions, 27% feel stressed about that. So there are things that are causing stress when it comes to dealing with financial institutions. We also
just on that one, Leslie, I think it's interesting to observe that this is a story that I still remember an executive, and one of my previous roles at a bank mentioning, which is that, you know, there are very few industries where you go to purchase somebody and the person on the other side says, no, you're not allowed. You can't,
Yeah.
you can't have this. It's too expensive for you. So the answer is no. I mean, it is potentially stressful because the person making the request might be rejected.
Yeah. And when we looked deeper into what was causing the stress, it was that, a lot of it, but there was also a lot of confusion that they weren't sure how it worked. They weren't sure of the process. They didn't understand how it was decided, whether they got a yes or a no. They just, and one thing, like changing banks or financial institutions at 27%, people were really stressed about that because they just didn't know if they were making the right decision. There's a lot of don't know that there. When we ask you, why are you stressed? Because I don't know. I don't know what I'm doing. I don't know. And just we did the study also among small business owners. And again, the stress, using a cash management system provided by a bank or financial institution, 55% of small business owners found that stressful. Applying for commercial mortgage, 50%. Changing banks or financial institutions, when you have a business, it ramps that up because it's 48%. And applying for a business loan at 46. So even when you're dealing not only with yourself, but with your business, it is even more stressful. That's my slides that I have. But again, what I really wanted to say about this is that what you're doing matters. People are looking for ways to simplify their life. They want more information. And I know all of this, you know, when I say more information, I clearly understand how difficult that is because you don't have an easy industry. You don't. There is a lot of there's a lot of details and there's a lot of facts and a lot of people won't understand them. But trying to make it easier will help people feel better about themselves, about their relationships, with you. And also when we look at what needs to happen and what the future is going to hold, it's going to hold choice. It has to hold choice. And even if you look at some retailers, you look at things like Amazon, who did so well because they gave people what they wanted. But you look at other retailers beyond Amazon, you know, you look at the bricks and mortar who had the really great curbside pickup. Who offered things to go, who offered all of that, who were able to pivot on that, they're still doing well and they're still offering it. But the people who got stuck and said, okay, this is our path and this is our lane and this is where we're staying, those are the people that had trouble.
Leslie, I've had quite a few questions from the attendees on the RAGE index. I'm wondering if you could just go back to that and I'll ask you a couple of supplementals.
Yep. There we go.
So first of all, do you have the breakdown along provinces for this or gender or age?
We do. And honestly, if you go to our website, Polara.com, the report is there that has all of that broken down
excellent.
as well. Yeah.
And in terms of the next slide, where you talk about people being upset about some of the types of changes happening, or I'm sorry, the latest stories in the news. Do you know whether this is about the way media is reporting stories, or is it about the actual stories themselves that are upsetting people?
It can be both because it's just what people are getting. It's what people are consuming from the news that is upsetting to them and is causing that annoyed or moderately angry feeling. So, and that it is a mix of both. It is both the stories, because there have been a lot of stories, but there's also a bit of what the focus is in how it is portrayed.
Thank you, Leslie. If it's all right, then we'll move into the sort of interactive section where I'd like to explore some of these very, very interesting themes you've raised. And I do want to remind attendees that we very much want to hear from you. So please use the Q&A function of Zoom, which is down at the bottom on the icons, and feel free to type any questions that you may have. Leslie, we had a webinar, a CAFE webinar a while back now in the midst of the pandemic about mental health issues. And we had some representatives of some of our members who spoke about how they're revamping their health benefits to really recognize that it can't just be about physical health. It has to be about mental health.
Right.
And the two are not disconnected. They're connected. I mean, a lot of physical health issues are related to mental health issues. I don't know if this is something you can answer, but in terms of the research you've done for financial institutions, have you gotten a sense that there's a shift in terms of viewing mental health and the recognition that it's critical to have programs to support workers, and as well as efforts to remove the stigma that has existed in the past about admitting mental health issues?
Yeah, definitely. It is there and it is starting. The stigma is a totally different problem, but in terms of in terms of what is being offered, it is becoming more important. And I think businesses are recognizing that, but so are consumers. And we actually just did a study recently about whether you would consider benefits packages when interviewing for a job. When you're considering a new job, are you looking also at the benefits package? And a lot of people are, because it has to be out there. And access to mental health supports is such an issue in Canada for a number of reasons that it has to, offering that, it has to happen. And you look at the people who are off sick, and part of the Mental Health Research Canada project was talking about how does it impact, and I think it was 1/3, about 1 in 3, who were saying that their mental health impacts how they work. They're less productive in the office, they're less productive, they're unable to work, they're missing time. So when you think about that, one in 3 Canadians are being impacted, their job is being impacted by their mental health. That makes it even more important for employers, because those are your workers who aren't working to their full capacity because they're dealing with mental health issues. Stigma definitely needs to be addressed, and that one's harder, right? Like, I think it is getting out there. We have there's a lot of good talk about getting help and getting mental health help. And I think, employers having those talks with people, offering the benefits, but also, being able to say, yes, you can take a day off because you need to, but unfortunately it goes a bit beyond the employers, but we're getting there. But I think there's still a lot of work that needs to be done.
Thank you for that, Leslie. Leslie, since you finished the formal part of the presentation, I'd like to suggest that you close it off so we can have a bigger view of you. Thank you. And I'd like to ask you about financial institutions during the pandemic, post-pandemic, in terms of some of the research you've done and how they're responding to consumer demands as well as employee demands. I know that some of the research you've done for CAFE, you told us that we were getting pretty good numbers, regardless of the industry, in terms of consumer satisfaction with credit protection insurance and health insurance. On the other hand, today you presented that about half of consumers with FIs, and maybe it's just the nature of the industry and the products as we discussed, do feel stress when they're dealing with their bank or insurer. Just looking at those various statistics, could I ask you just to offer us your insights and your observations about how FIs are doing across a range of these metrics related to other industries? Are they doing better? Do they have some catch up to do? Really be interested in hearing your thoughts on that.
And as I said, the industry is different. Trying to get a mortgage or to get an insurance policy is a lot different than buying a pair of socks on Amazon. So it is very different on what how people are seeing it. Financial institutions are doing quite well. Satisfaction with financial institutions and what they're offering is pretty high across the board. So people understand. I think that's really what it gets down to. People understand the difficulty. People understand the complexity. But overall, they're not doing too badly. I'm just thinking as I'm talking, there's financial services industries. Like I'm looking at, satisfaction with things like the relationships that people have, which are still pretty high, but they're really being they're being criticized more, they're being looked at more, like looking at value of advice, for instance. People are having a little bit harder time with the value of advice portion and seeing, what are they getting out of it? What is for me? So it's looking at it sort of from two different ways. So overall, I think that financial institutions are doing quite well in terms of being able to service people and being able to do that pivot during the pandemic. They did quite a good job on that as well. But that whole relationship thing is so important, and people are wanting more and more out of that. So it's not something to forget about.
And maybe I could ask you on that subject to elaborate a little bit on something you've told us in some of your sharing of the polling results that you've done for CAFE and its members, which is that it's no longer the case that FIs can compare themselves to each other. They now have to look at how Amazon is doing, how the leading organizations that consumers are delighted by are doing. That's who consumers are going to compare us to. Could
Yeah.
you just elaborate on that? Is that still your view?
Yeah, it still is to a degree. And I want to, like, as I said earlier, right, you're different. And so I don't think that you can clearly across the board just say, here are we, here is Amazon, here is Apple, and expect it to be the same. However, consumer experience is consumer experience. And how people are feeling about that experience, the experience is not the same, but how they feel about the experience can be. And you want to be able to compare, and when you look specifically at the feelings of their consumer experience, that you are getting up there with the other companies that they're using, the Apples, the Amazons, like that. That is really important to look beyond just FI experience.
Okay, thank you for that. Let's shift just for a moment to the war for talent. And I'm just wondering how you see employers trying to manage that. We always think of pay and maybe benefits as the key, but you're telling us that there are other factors at play now that are fundamentally important. Working from home is one of them. Perhaps there are others. Could you just let us know how employers should sort of adjust the approach they take to employees to retain them and even attract them?
Yeah. That whole work-life balance is that the lip service has always been there, but now it's becoming more important. So people are looking at things like the work from home, like having flexible schedules. It's really important to people that they can take care of their family or take care of their loved ones in whatever capacity they have to. Having that ability to fit their work into their life instead of their life into their work. Is that right? I'm not sure if I got that one right. Anyway, but you know what I mean? Like just being able to be flexible on that. And there's something else that I'm going to speak to is a new trend, and I don't know if this is actually, I'm not sure if this is in financial institutions, but there's a new trend of unlimited vacation, and where companies are saying, you can take as much work time off as you want. I think that is one that, although it seems like it is a good thing, like wow, you really care. I think companies have to be careful on that as well, because pretty soon what's happening is people aren't taking the vacation or feeling that they can't take the vacation they want to take. So that's another thing that companies really have to be aware of the work-life balance and give people the options to be able to do everything they need to do. And it doesn't make them less productive, right? It doesn't, if they're having to, sign off work because they have to deal with a sick child, like it doesn't make them less productive. People are still getting the work done, and they're going to be more loyal to a company that is providing them that ability.
Thank you, Leslie. As you know, Leslie, we have a couple of polls today that we'd like to conduct. And as a pollster, I know this is close to your heart, so you won't have any objections. So I'm going to launch poll number 1. So I hope everyone can see that. The question is, have you cut back on important purchases due to inflation? Now, Leslie's talked about this as a significant issue she's tracking, and we'd like to hear from our attendees. So we're going to give you a few moments, and then we'll share the poll results. Or just wait a few more seconds, Leslie.
Great.
So you should see the poll up there, and you can just answer whichever is the right answer for you. I'm going to end the poll now, and I'm going to ask Leslie to comment. So Leslie, we see that of the people who participated in the poll, 5%, about 20% said they've significantly cut back on important purchases. 44% have said that they've moderately cut back. 37% said not at all. So really a little bit all over the map. What do you make of this?
I think it's exactly what we have been seeing, is that there are a lot of people, and this is reflecting the research that we've done as well. There's a lot of people that are having to cut back at this point, and or not even. And this is so what you were saying earlier about, you know, if people think there's going to be inflation, inflation's going to happen. Whether these people really need to be cutting back, and in our poll and in the real research, they feel they have to. There's this uncertainty, and the uncertainty makes people pull back and not spend. So yeah, this is reflecting what I would expect.
And have you heard anything from employers that you work with in terms of how they're going to manage this? I mean, there's a couple of issues here. One is inflation at 8 to 10%. Having workers keep up, or employees keep up with that level of inflation is a very significant wage adjustment. And then, of course, if you make that wage adjustment, then you've sort of ensured that the inflation will continue. So
Yeah.
It's a real conundrum. Have you heard anything about how employers are going to try to deal with this?
Honestly, Keith, I haven't. This is one that is relatively new on our radar within the last few months, and how is this going to be managed? I'm not sure.
Now, I want to ask you, in terms of broader issues, you've spoken about some of the digital changes that have occurred due to the pandemic. We touched on some other issues related to other changes in behavior. What do you think are the 2 or 3 things that will change in our society on an ongoing basis as a result of the experience of the past few years?
As I said, I think that, you know, before the pandemic, there was generally a way of doing things. During the pandemic, there was a way of doing things, and now there's more than one way of doing things. And I really don't think that's going to change. I really don't. I don't think that everyone's going to go back to the way it was before the pandemic, and I don't think everyone's going to stick to the way it was during the pandemic. So I think that options is my key word here. Is like, it's going to be imperative to have options, which is harder for some industries. Like, some people are going to have a really hard time with that and balancing those options. But I think it's really important, because once you've done things a certain way and you're like, wow, I like this, you're not going to give that up. And so, and although throughout my presentation, I was talking about the financial services industry going back to the branch, talking to people, having that face-to-face, having that relationship is being important. You can't forget that quarter who are saying, no, I don't want to do that. I want to do it on my own. I've done it on my own, and I think it's great. So I think options is the big one. And I think there was supposed to be 2 or 3, wasn't there?
Well, that's helpful. And I know something else that I've read is that, especially in IT, but in other industries as well, prior to the pandemic, employers had to look for talent in a geographical zone. They had to look for a pool within that zone. But now, with all the new tools around digital ways of working, and with increased demands from employees to be offered that, it's possible to hire people from potentially anywhere in the world,
Right.
if the task does not require, being there in person. Has your research uncovered any of those trends, the sort of trend of the internationalization of the workforce?
Yeah, we have, because we've looked at, there was also a trend during the pandemic of people leaving the cities, right? And a lot of people moved away from the city because they were working online. And so they didn't have to pay their rent for their little, their little condo downtown, when they could buy a bigger house way outside the city. So now as things are opening and people are expected to go back to work, there has been a big shift here on what's going to happen now, because now all of a sudden we've got people who are living, you know, an hour, 2 hours, 3 hours further out of the city, and workers or some companies are saying, well, you need to come back now. So I think that's going to be something that's going to be big as part of what I was saying about work-life balance. Is that's what people are going to look for, is they want to be able to work from wherever they want to work. They've already, again, they've proven they can do it. They don't have to be at the office. They don't have to be in person. So why do I have to sell the house that I love out wherever to come back to the working world? So we have seen that as an issue that's coming up, and I do think that that's going to be something that managers are going to have to deal with.
Okay, excellent. Well, there's a second poll that we're going to launch now, Leslie, and it's connected to the other big issue that you were speaking about, which is working from home. So I'm going to launch that poll and ask the folks that are on the webinar to participate in it. So the question is, tell us where you are in terms of a return to working from the office. Just like before the pandemic, in other words, working from the office, still only working from home, or hybrid, working from the office sometimes, but not every day. We'll just give a few more seconds, Leslie, to hear the results, and then I'd like to hear your comments about what we find. I think this is one of those issues, Leslie, that is, it's not like it's going to get resolved overnight. It's going to play out over a while, I think.
Yeah, I agree.
Have you found evidence to the counter view that not having teams together can undermine a corporate culture or result in less team cohesiveness?
Yeah, definitely. It is definitely, we have seen that a lot as well. And not only just from managers, which is definitely from managers, we're seeing, like, you know, there's not the innovation, there's not the bouncing ideas off of each other, there's not the team cohesiveness, but also there are some people at work. And that prosperity project that we looked at, we are asking women as well, what is holding back their career, and do they feel that their career is going to be held back by not having that in person? Because that's the other thing as well, is that when you're thinking about your career and you have somebody who's in the office every day, and then you have somebody who's working remotely, the person in the office, they're face to face, right? They're building that relationship better maybe than the people, they're just there, right? You see what's in front of you. So that is another issue that it is on both sides, both the company productivity, cohesiveness, and also the career cohesiveness, not cohesiveness, but your career advancement. And can people who choose to work from home for whatever reason, can they advance in their career as much as people?
So you're asking these women that question, how did they answer?
Honestly, the problem, well, what we found is a lot of women who were single or didn't have children were like, yeah, no, I need to be in the office. But a lot of the people who have families, they think what's really going to hurt their career is their family. Like, that is the biggest thing that women think is going to affect their career, is their children and their family and having to take care of them. So for those people working from home, where they're not saying, you know, I need to leave, my babysitter called in sick, I need to leave, the school just called, is actually going to be better for their career than it's even easier than just not having a piece of this.
So thank you for that, Leslie. I'm going to end the poll and launch the results. But before I do so, CAFE attendees include people in the financial institution and insurance industry as well. We are very pleased to have our many regulators and policymakers who work in government, which are probably two of the organizations that have perhaps more flexibility about a hybrid model or working from home. Obviously, if we asked retailers this question, we might get a different answer. But my goodness, the results are fascinating. 97%, 95% are saying that they're either working only from home or hybrid. Does that surprise you?
No, not at all. I really think, I think hybrid is, and you can see the numbers here, hybrid is very big right now. And I'm not sure, like, you asked me well, you asked me in 2020. I remember in March 2020, them telling us to go, we're staying home for 2 weeks. And I thought that was ridiculous. Why did I have to stay home for 2 weeks? 2 weeks. You know, but at the start, I thought, no, there's not going to be a hybrid. It's going to be back to the office, but I really don't think that's going to be the case. I think hybrid is going to be what's going to happen for a lot of people moving forward.
You've shifted your views on that.
I sure have.
So Leslie, tell us, as we come to the end of this very fascinating webinar, and I just really have enjoyed this opportunity, as always, to hear your thoughts. What is the most surprising finding you've uncovered in your recent polling?
I really think that 45% of women quitting, and I don't think just for that, but I think, as I said at the time, really, I think that's what we see moving forward. And I've seen it in so many other industries and in so many other surveys and in so many, and like, just people really want choice now, and they're not going to, they feel they deserve choice, and they're going to fight for choice. And I think that is something that I find very surprising, because it is more so than it always has been. Everyone always wanted choice, and they wanted to do things the way they wanted to, but now it's more like it's an expectation that this is what they deserve, and this is what they're going to get, and this is what they're fighting for. And I think that is something that is was unexpected for me anyway, coming out of the pandemic.
Thank you for that. And a sort of related question, but I know you work closely with financial institution managers and executives. Based on your insights and what you've seen, what is the top advice you'd give those managers in terms of preparing for their future as employers?
Well, I would say as employers, I would say, like, again, like I said, choice. Make sure that you have options, but don't forget about relationships, because they're really important. And this is really more for consumers than employers. It's really important to have those relationships and keep those relationships. Don't ever forget about them, because that loyalty is what's going to keep people with you. And for employers, it is, again, just being flexible and letting people work the way that they need to work in order to be as productive as they can for you. Because you can't forget that. Although you're giving them flexibility, it's going to add to their overall productivity when it comes to your work.
All right. Well, I always learn so much when I have a session like this with you, Leslie, and I can't tell you how much we appreciate our relationship with you. So thank you for your time today. I'm going to end the webinar by asking you if you have any final thoughts or comments, and then I'll thank our attendees. So Leslie, final word to you.
Well, I just want to thank you, Keith, for allowing me to do this and for sharing my thoughts. I've had a very interesting time.
All right. Well, thank you, Leslie. And I want to thank all of the attendees at this CAFE webinar. We very much appreciate your joining us to hear from Leslie Martin from Polera. And do want to mention that we will be having a few more webinars in the next few months, and you will be receiving information about that, including all the details, in the next weeks. So thank you again, Leslie, and thank you to everyone who participated today. And I now formally end today's webinar. Thank you, and have a great afternoon, everyone.
Thank you.
Bye-bye.
Bye.